It's no secret that investors are flocking to safe haven assets right now, but what really is the best thing to own at this time, if there is such a thing? Joining me right now is Lobo Tiggre of the Independent Speculator, joining us all the way from Puerto Rico. Lobo, thank you for being on the show. I hope you're staying safe.
We are. Thanks for asking, and I hope you are as well, and our audience.
Thank you very much. Lobo, there's a lot of ground to cover today, but let's start with the metal that you think has the best or highest investment return potential at this time. And I know you have several definitions, so walk us through some of them.
Sure. Well, as you and our audience, I'm sure, understands, one size does not fit all. But I'm not going to dodge the question here. I do have answers for you that I hope we'll all find useful. And the good news is actually good news and good news. There's no bad news to it. And that is the precious metals, monetary metals, are a great space to be in right now. And that's not just because gold is holding above 1700. I mean, that's great for the producers. But what's more important is that gold is a metal that day, I think, has finally come. Its day to shine in the sun is here. The breakout that we saw last year, it's not another 2016 head fake. It's got legs. It's going. Even the likes of Bank of America is calling for $3,000 gold now. These aren't gold bugs. This is a more mainstream set of analysts, and they're recognizing all the money printing going on in the world and saying the Fed can't print gold. There's nothing we haven't said for a long time. What's different is that the mainstream is starting to catch on, and that's very significant. As you know, if a tiny portion of the overall investment world were to take note and decide, well, maybe a little bit of gold would be a good thing to have in my portfolio, it'd be a total game changer for us. Now, here's why I said this is good news and good news. Let's say I'm a cautious investor, I'm retired on a fixed income, I can't really risk my nest egg, but I want some exposure to the upside we see here. Well, the beauty is you can have that just by buying gold bullion. That's something that I buy for prudence. It's where I put my savings. But it has so much upside right now that I can speculate on the same thing that I would buy for prudence. I think that's fantastic. But it also answers the question, if I'm a speculator, why would I take a chance on something that can blow up when something I would buy for prudence can provide spectacular returns? If gold itself could conceivably double or better over the years ahead, we all know that the gold stocks add leverage to gold. So there's opportunities here, I think, in a win-win type scenario going forward to make a lot of money. But the most explosive opportunity actually may not be in gold. It might be in the other yellow metal. As I'm sure our audience probably has noticed, uranium has gone vertical over the last couple of weeks. And that also is driven by strong fundamentals, as well as the current circumstance. We can talk about that if you like. But those are my general answers right now.
Yeah, let's come back to gold in a bit, and let's focus right now on the other yellow metal, as you say, uranium. Let's talk about the supply-demand fundamentals. Have we seen the same mine shutdowns that have affected the gold producers hit uranium miners as well?
Yes, indeed. And that is part of why things have gone so vertical right now. But there's better news than that. The uranium market was in a but this is a big thing, and people can read what I've written about it at independentspeculator.com. It's more than we can get into right now, but let me just say it's been in a structural supply deficit for a long time. Mine supply, even with the Kazakhs coming online with lots of cheap uranium out there, the mine supply hasn't been enough for many years, and that's worked because some of the above ground supply has come back on the market, particularly in Japan. After the Fukushima accident, there was a lot of uranium that came back on the market. So a couple things have happened. One is that secondary supply appears to have dried up, and that happened last year or 2018. It started. But then on top of that, we have the current circumstance where mines are shutting down, and not just any old marginal mine, but the lowest cost producers in the world in Kazakhstan had already announced voluntary production cuts like OPEC. And on top of that, they're saying because of the COVID-19 situation, they're likely to produce about 16% less than anticipated. And this isn't just any pounds of uranium. This is the lowest cost pounds of uranium on the market, that now suddenly there's going to be less of them. At the same time, you had Canada's big producer, Cameco, shut down their number 2 mine last year, which was a big impact in the market. It was what really started the current turnaround. And now they've announced that they've shut down their number 1 mine, which single-handedly supplies something like 12, 13% of the world's supply of uranium on a yearly basis. Now, they said they were shutting that down due to the outbreak, but they also said, well, we'll see about starting it back up again, and we'll evaluate at that time. Now, they've already announced that they're going to extend the shutdown, and there is no announced time for reopening. And you can't just turn these mines off and on with the flip of a switch. This is a big deal. This is an acute supply situation hitting the market right now on top of a long-term fundamental structural supply deficit. So I'm extremely bullish on uranium.
Mm-hmm.
I'm not surprised to see the prices taking off now. And good news, the stocks apply leverage. We've seen days where these stocks have moved by double digits, large double digits in response to the news today.
What are you seeing in terms of energy demand, and how is that going to impact prices going forward? We've seen oil hit rock bottom prices like we've never seen before. Can the same principles of demand be applied to nuclear energy as well?
Yes, that's an excellent question. Of course, uranium is an energy commodity and oil is an energy commodity. So if the energy market is, taking it on the chin because of all the COVID shutdowns and people using less energy, industry using less energy, absolutely fair question. But there's an important distinction here in that when the shutdown causes people to stay home, they don't fly as much, they don't drive as much. Some industries don't produce as much because of reduced demand. That does impact energy prices. But not all energy is created equal. It impacts oil prices more. When people don't drive, they don't put gas in the car. That's a very direct impact on petroleum, not uranium. The other thing is that nuclear power plants, where they really shine, what they do best is to deliver stable baseload power 24/7. Rain or shine, you don't need wind for this. It doesn't matter if low water makes your dam reservoir have less water for generating hydropower. None of that matters. As long as you build your nuclear power plant safely in a safe place where it won't get hit by a tsunami, it delivers, come rain or shine. And this is the power that people use to keep their lights on at night, to cook their dinners, or hospitals to keep in business when they are so needed. So what I'm saying is that nuclear power has been, because of its nature, it's been used to stabilize baseload, always on power. And that's not going to go away in a recession. Even if people are tightening their belts and they're not going to movies or doing all these other things later in the future, they're going to eat now. You can't put off eating until next month or after the recession. And that's, if not necessarily bullish for uranium itself, it means that demand for nuclear power is solid. And in that environment, you've got a situation where the mine supply isn't keeping up, the secondary supply isn't hitting the market anymore, prices are going up. The buyers who haven't been in this space for some time due to the excess supply coming on, they have to be looking at this and they have to be thinking, maybe it's time to start engaging in some long-term contracting here before prices go higher. And that could be a game changer.
Let's move back to the other precious metals for now. Gold and silver. You wrote in a recent report that oil going negative is positive for gold. How is this possible, Lobo?
Well, it's positive in the obvious way would be like we started out talking about with the producers, right? They burn oil in their trucks in the mines, or they have generators because they're way out in the jungle somewhere and there's no electricity out there. So a lot of mines burn a lot of fuel, and that cost going way down, dropping 50%, 70%, who knows where it'll end up. It's a great tailwind for them, but that's not actually the point I was making. The real point I was making is that oil falling off the cliff the way it did, and going negative, like actually having to pay people to take a barrel of oil off your hands, that's beyond unprecedented. That's crazy type turn of events that almost nobody saw coming. And this is really significant. I mean, this kind of thing happening in our markets, it tells us that all these economic models that the governments and the big banks and big investment firms use, none of them work. We're in uncharted waters. in a situation where oil can be negative, where you have to pay somebody to take oil off your hand or a contract, none of these projections really hold. And that uncertainty is really bullish for safe haven assets.
Last metal, and we'll wrap it up today. Silver. I read reports that in prior recessions, silver actually behaved more like an industrial metal, and for the most part has seen losses with minimal gains. First of all, do you agree with this analysis? My last question to you is, do you like silver at this time?
The answer is yes, but only in the short term, and yes, but over the long term. So,
Okay.
of course, silver is used in industry. China used tons of it in making photovoltaic panels, solar cells and so on. It is an industrial metal. And if industrial demand just fell off a cliff, of course, silver is going to get hit. And we saw that in March, where gold dipped when the market melted down, but silver fell off a cliff, just like the rest of the market. And that makes sense at the time. You have a substantial amount of demand just going away. But silver is not only an industrial metal, it is a monetary metal. Silver is the word for money in many languages around the world, and silver does track gold. So the industrial demand can go down at the same time that investment demand can go up. And in fact, we saw this not just in history, but last month. Try going to Kitco and finding silver maple leafs or eagles, right? They were out of stock. So in my mind, this actually makes silver a win-win metal going forward, because to the degree that the industrial demand goes away and puts the metal on sale, the metal itself, that sets it up for a spectacular rebound based on a lack of supply at a time when the investment demand, the monetary metal aspect, is taking off. We also know those same people who point out about these recessions in the past should also see that there's a long track record of silver lagging gold. In a major bull market, silver typically lags by months or even years. Gold takes off, and it seems to take a while for silver to wake up. But when it does, it really does, and it outdoes gold on a percentage basis. Of course, not dollar, nominal price basis, but on a percentage basis, the gains when there's a major precious metals market rally in silver always outdo the gains in gold. So, in my mind, this sets up a beautiful situation where the industrial realities that we're looking at going forward right now could give us spectacular buying opportunities in the silver space at a time where it predictably can be counted on to outperform gold, and we're extremely bullish on gold.
Okay, wow. Something to look forward to there, I guess, for the precious metals investors. Thank you very much, Lobo. Thank you for coming on the show today and letting us pick your brain.
Sure thing. Regards to you, the audience, and to Daniela and her twins.
Yeah, she's doing well right now, I hear. And thank you for watching. I'm David Lin. There's more for you on Kitco.com, so stay tuned.